If you're looking out to start forex, or let me say you're a new forex trader and you're looking for strategy to start out with, there are 4 things you need to pay attention to. Now, the first one is simply the trend. Secondly is the market structure. Thirdly is the concept of supply and demand. Fourthly is the concept of liquidity. Now, the trend is simply what tells us the direction of the market and as well shows us key levels in the forex market. Now, market structure is simply what tells us the pattern price is making. Is price creating higher highs or higher lows, or price is creating lower lows or lower lows? So market structure tells us what the price is actually doing or pattern price is making. Now, the third one, which is concept of supply and demand, is simply what tells us the zone price is going to likely sell from or zone price is going to likely buy from. Now, it tells us that, okay, this particular zone, which is referred as supply zone, is where price is going to sell from. And this particular zone, which is known as the demand zone, is where price is going to buy from. Now, the fourth one, which is known as the concept of liquidity. The concept of liquidity is simply what tells us the confirmation that, okay, this zone is going to be valid or this zone is not going to be valid. I'm going to explain one of them on the chat, but before going to the chat, if you're seeing me for the first time, my name is Divine, and what I basically do on the channel is document how I trade, as well as show you the massive behind my strategy. If you want to be seeing content like this, I want you to like this video, drop a comment, and as well subscribe. No, I want you to subscribe, like, and drop a comment on this video. I'll be right back. The first thing I'm talking about is simply the trend. Now, the trend is simply what tells us the direction of the market and as well key levels in the market. Now, let's for instance say price is moving like this. Now, you can clearly see that price is going to the upside. Price is in an upside direction, and now we cannot really assume that price is in an uptrend direction with our eyes. We have to use the trend to confirm that price is actually in an uptrend, even if our eye is seeing that it is in an uptrend. The trend needs to confirm that it's an uptrend before we can proceed. That's how I do my analysis. I don't allow my eye to tell me what's going on in the market, but let my strategy tell me what is going on in the market. Now, let's for instance say what you're seeing here is in an uptrend, but we're not sure yet. We have to confirm with the trend. We'll simply bring out our trend line and confirm that, okay, yes, we're in an uptrend. Now, how do we use this confirm? How do we use trend line to confirm our key level, since we have been able to use it to confirm our direction? Now, if we study this trend now, this particular trend I just drew now, we'll see that price is respecting the trend. When price comes to the trend, price always buy. When price comes to the trend, it buys. It comes, it buy. Whenever it comes to the trend, it goes up. Now, how do we identify our key level? Now, if I have to identify our key levels now, where becomes our key level? Here, the last place here becomes our key level. As well, this level again becomes our key level. And as usual, the current place price is becomes our key level. Don't allow this to distract. Let me move it. Now, we've been able to work out our key level by simply looking at this trend. First, we use the trend to identify our direction by drawing and seeing that you're on an uptrend. Now, we mark out our key level, showing this low, this one here, that price broke out from, and the current place price is. So these 3 places are our key level. And most of the time, we want to always look at this key level, look out for this key level, or look out for this direction on the higher time frame, like daily time frame. I often use daily time frame. Now, having identified our direction of the market and as well our key level, the next thing I want to talk about is simply market structure. Now, market structure is simply what tells us the pattern that price is making. Is price creating higher highs and lower low, or price is creating lower low or lower highs? Now, if I have to see use the same level, now let's assume we expand or go to this is a high time frame and we'll go to lower time frame just to figure out what is going on in this place and in this place. When we want to look for our market structure is simply at this level here, at these key levels. That's what we want to look for our market structure. So what I'm going to remove this particular one. I don't know how I'm going to do it, but I'm going to clear this particular phase now and explain it on a clean slate. So I'm going to remove all these things. Let's not, you know, confuse ourselves. Although I'm still going to give you a practical example on the live chat, but let me just explain it here before we go to the chat me. Now let's assume we have already marked our key level. We have already marked our key level. Let me bring that thing back. Oh. Now let's assume this is our key level now, and at this key level now, we went to 4 hours time frame, and we're seeing price is doing like this. We're seeing price doing like this on the 4 hours time frame. On the 4 hours time frame. Remember, these are our support key level that price give us. Oh my goodness, this thing wants to stress me. Oh god. Just relax, let me fix it. Don't worry, I'm gonna fix it. Now, let's assume this is that low so on the daily time frame. Now this is the other key level that we saw on trend. Let me put it here. And this is the resistance key level where price is currently at. I hope I'm not confusing you, but this is exactly what we did earlier on that we're opening to see on the 4 hours time frame. Now, if I have to understand what is going on in this market structure now, I simply see that price is creating higher highs and higher lows. That means price is actually on an uptrend. Price is creating higher highs and higher lows. So what I'm clearly going to do here is to work out our recent high and our recent low. If you look closely, here's our recent low, and if you pull it closer, if you drag it closer to the other side, we'll certainly see that this place is the recent low that price gave us. Now, what we're going to do is to simply pay attention to this place and look for possible demand zone since price is in an uptrend. Now, see how we're going to the next third phase, which is simply the demand zone. Now, we're able to identify the market structure on the 4 hours time frame. Now, we are looking for the demand zone, and where we often want to look for the demand zone is simply maybe on the 4 hours time frame or on the 1 hour time frame. On the 1 hour time frame, what we want to do is come and be looking for the demand zone or supply zone if price is in an uptrend. If price is in the downtrend, we want to look for, because price is in an uptrend, we want to look for a demand zone. Now let's assume we expand this thing to the 1 hour time frame, and we are paying attention to what's going on this place. Now this place here. Let me move this one here. And now let's for instance say what price is doing here. That price is still creating higher highs in a small pattern, higher highs, taking out liquidity, going up, higher highs, and doing all of these things. It's not really clear what price is doing here. At this level here, there must actually have been a demand zone here. And what is demand zone? This demand zone simply shows or print places where price is going to likely buy from or sell from. But for the sake of this example, which we are seeing as an uptrend, we want to look for demand zone where price is going to actually buy from. And there are about 4 types of supply and demand zone. We have the rally base rally. I'm going to see explain it to. We have the rally base rally. This is a type of demand zone, and the demand zone is often around this area here. This is where you can see the demand zone. Let me use my toolbox. Is it box two or what is it called? Okay. Now this is where the demand zone is always at. This place is a demand zone. Rally base rally. So what I'm going to expect for now at this place now, if this is occurring at this place, what I'm going to expect for is price to come back. Let me open this again. I hope you understand what I'm saying. If you understand what I'm saying, you can drop a comment on the comment section. I don't know. You should just drop a comment so I'll be I'll feel like you can follow him what I'm saying. What's that? What am I looking for again? Now what I'm expecting for now is the price are giving us this demand zone here. What you're expecting for is for price to come out to this zone and continue pushing up. Now before price comes to this zone and continue pushing up, we want to look for something around this zone, which is called the concept of liquidity. Now, before we can say this zone is going to be valid, we want price do like this. Let me move this one. Oh my goodness. I need to buy a board so it will be easier for me to explain. If you agree with me, Drop a comment on the comment section too. Oh, this thing. Now, if you are to proceed to the concept of of liquidity. Now, since price are giving all these demands on here, what we want to see price do is we want price to actually come like this, give us a sort of liquidity here, which is clearly seen here, maybe an equal low, and what we want to see is price come back to this zone, taking out this liquidity that price give us here. This was the liquidity price created here. Double bottom here before price went into this demand zone and then continue to push up. So this is what we want to actually look for before we actually take a trade in the market. Remember how I started from the beginning and explained to you trends, market structure, demand and supply, and as well this last part now is what's called concept of liquidity. Let me go to the chart. So we was going to explain and see these things for ourselves on the chart. We're going to do a practical example on the live chart. But I'm going to clear all this thing right now before we proceed. Mind you, let me revert this thing. So this stop loss I see here was the trade I took yesterday. Is it day for yesterday or yesterday? I can't remember. 2 days ago, maybe. Yeah, my last video. This setup here, this thing is making me slow. Who are you making the noise? Now, this setup we're seeing here right now is what I took on my last video that we had a stop loss. But price is actually buying to where we actually wanted to buy to. But initially we took the loss first because yes, market is the order. Now let me go to the chart and explain this thing step by step all over again on the chart. Should I analyze this pair? Let me see analyze this pair. Yes. Now remember first off is to go to the high time frame and understand the trend and actually see direction of the market as well key levels in the market. So what I'm going to do now is I'm going to let me analyze US GBPSD. Let me analyze USD. I'm going to clear this one off. I'm going to clear this. Now here on GBPSD, what I want to do is to go to the higher time frame. For me, 1 hour for me, daily time frame what I want to use and identify the direction of the market and as well market on the key levels in the market. Now, if I were to look at GBPSD on the time frame, we can clearly see that with our eyes, price is in an uptrend. But remember, our eyes is not what we want to look for. Our eyes is not telling us what we want to do in the market. Now, if we look backward, we will see that price was in an uptrend here. Price was in an uptrend here, and price broke below this trend here and gave us this low here. And price is still okay. Now this low now becomes our key level. Remember, this low is our key level. Our key level again is here that price broke out from. So you have seen our key level here. I've seen our key level that we want to pay attention to. We have seen our key level that we want to pay attention to. This place that price broke out from, and as well this high that price give us here. This current high that price given to us. So we are really paying attention to what price is doing at this level and at this level. What next? We go to the 4-hour time frame and understand the market structure that's going on above and below this resistance and support level. So what we're going to do is go to the 4-hour time frame here. Now on the 4-hour time frame here now, if you have to look at this point of price, this level here and this level here, what you can clearly see is that price is in an uptrend. So we use that again to confirm the direction. And as you can clearly see, price broke below the trend. So we are going to pay attention to what's going on in this place. And what is going on in this place. Now, if we look closely now, what I really seeing here that price is consolidating. price is not really giving us a clear direction of where it's going to. But we can clearly see that price is consolidating. And what this means is that price is engineering liquidity both to the upside and as well to the downside. Remember, we are paying attention to what the price is doing at this level here and at this level here. And what I can clearly see here, I'm clearly seeing a supply zone here on the 4 hours time frame, which is some sorry, a demand zone. Sorry, because price is in an uptrend. So this zone we are going to pay attention to for price to come into. So we're looking at what price is doing at this place because clearly you can see that price have engineered liquidity here, creating series of equal lows and equal lows down this place. And price is just manipulating around this key level, or maybe price trying to respect that higher level. And once I clearly see that price is going to seek the sell side liquidity, meaning that price have to, after price has finished seeking sell side liquidity, price is going to seek the partial liquidity. For some reason, let me explain how liquidity works. Liquidity is simply what moves the market. For price to move, price needs to seek liquidity. And how it works is that when price seeks partial liquidity, price tends to go for the sell side liquidity. And when price seeks sell side liquidity, price tends to go for the partial liquidity. Now, if you can clearly see here clearly, now you can see that there's liquidity right above this area here, which is the partial liquidity here. This area is the partial liquidity, and this side is the sell side liquidity. And our price is going to seek for the sell side liquidity, meaning price might likely go back to seek to the partial liquidity. So for me on this setup, this is a possible setup for me on GBP USD. This is a possible setup for me on GBP USD, and this is how it's going to be for me. I'm going to be risking 65 pips on this setup. If price failed to hold this demand level, I'll simply change my bias to a sell. Now, if price failed to, if I take my stop loss, I'm expecting price to come back to this zone again and become a flip zone for me to sell from. So for me, this is a very possible setup for me on GBP USD. If there's anything you want to ask me, or if there's any question you want to ask, drop on the comment section. I'm going to respond to you. I think this will be all for this video. You see me on the next video. Peace.